Good evening. This is Duane Lowry for the DPP Grain Desk. It is Monday night and about 3:40 in the afternoon. The calls here tonight I think will be a little bit weaker. I think the focus is initially on Argentina's weather activity during the weekend. There were a few rain showers. We have more coming tonight. A couple of different events during the week. I think in general the forecast is seen as slightly wetter than the forecast on Friday. Expectations by the time the week is done that meaningful rainfall will have occurred on at least 75% of the region. Meaningful being defined as a half inch or more. Some areas will get 2 to 3 inches. There are differing viewpoints about the outlook for the 6 to 10 and the 11 to 15. But I think in general you're seeing a favorable forecast and an improved forecast. I think that's enough to lead us to an initial weaker tone here tonight. I think it's important to point out that while we're trying to dictate initial market direction this week on South American weather, last week's attempt to try to trade Argentine weather was usually done focusing on corn. And I think there was a very, very poor correlation between corn price action on a day-to-day basis, intraday basis as well, attached to either morning weather forecasts or midday updates. Basically, you had a bullish weather spin every day last week, Monday through Wednesday, and the corn market underperformed expectations. Then you had your first bearish look on weather on Thursday, and that was actually corn's best performance. But that early strength was unable to be maintained, and then you had a bearish forecast and a bearish market spin on Friday, and the corn market was soft. So I don't think there's a direct correlation. I don't think you can be confident about any correlation. That said, that's what we're using to try to determine expectations for tonight's call. So I think we start weaker. I think that the technical condition of the market still has an opportunity for a decent short covering phase and an attempt to take corn prices back above last week's highs. That type of move is still seen, in my opinion, as being a producer selling opportunity, and I hope that we have another chance to get that type of strength. If we don't, we're going to look back and find out that the short covering rally, the corrective price rally, however you want to call it, basically was a report reaction and about a half a day more the next day, and that was it. That's not much of an opportunity for a producer to react, make plans, make sales, etc. And I hope that wasn't the only chance that we get. I don't think it was, but it was certainly poor price action last week. There's not much here for other news, I don't think, for the market to trade. The overall outlook, longer term outlook, downside risk, however you want to call it, I don't think has changed much, despite USDA offering a report that was less bearish than that people expected and possibly labeled as bullish. But I think the longer term outlook, if you have a favorable spring, you get off to a good start, I think you're still dealing with the same type of downside risk under those conditions that we had before the recent USDA report. So I think the producer still has reasons to look for places to make forward sales, to move through inventory, to hedge it, whatever happens to be your best plan of attack. But doing nothing, I think, would be a threat. And I think the downside risk from current levels could easily be 50 cents. Maybe it's something more than that. We'll just have to wait and see. But short term here, I think you're looking for a weaker start, early week weakness. I think the technical conditions are such that we may not see much follow-through energy to that, and I think as the week recovers, we have a chance for prices to rebound. In that process, over the next 1 to 2 weeks, hopefully that will lead to a corn rally that takes out and trades above last week's highs. As far as beans are concerned, beans might actually be more willing to respond to bearish weather here than corn. Might get some more initial selling energy there. The soybean market appears vulnerable for several reasons, not the least of which is a very abundant global supply and record South American production prospects. Soybean market has been performing relatively buoyantly and strongly in the last couple of weeks. I think a lot of that, though, is due to short covering, and I think I'm not sure there's any new fundamental reason here to be sustaining these values. That said, maybe we've got another week to churn around up here, largely spend this week inside last week's trading range. So I think you look for initial weakness there. Notable support in beans, I think, is 15 to 20 cents below Friday's close, so you got that much type of weakness. I'm not sure if we get that much weakness, but I think that's the type of weakness you get before you find some really good support. I think the resistance builds around last week's highs, maybe in front of last week's highs, and I think you could spend all week in some sort of choppy activity defined by those parameters. As far as wheat's concerned, we don't have a lot for news in wheat. There's not a lot of interest. The wheat market recent lows is about 3 cents below Friday's finish. I think there's a good chance we take out those lows. Short-term technical conditions are such that you probably lack much follow-through selling. You might be able to get a rebound and a corrective move and some short covering activity. If that's true, I think it's possible it could be 20, 25 cents, that type of activity, and I think that's what we look for over the next couple of weeks. So all in all, when you put it all together, you're looking at early week weakness, but I'm thinking there'd be some sort of recovery and stabilization in all of these markets, and maybe a decent corrective bounce in corn that takes out last week's highs, and maybe a even more significant corrective short covering rally in the wheat market. For the DPP Grain Desk, this is Duane Lowry. Thank you.